Good day, everyone, and thank you for joining us on this Avoiding Payments Lockdown session. So as a summary of what this is going to cover, this session will give you a highlight of the recent EPA review paper on avoiding a payments lockdown. This was written by the EPA for the FCA, HM Treasury, and the industry at large from the project regulator team. Practical application of the information in here has all been now distilled into one easy to reference place, and today we'll talk you through that. So my name is Mitch Trehan. I am the UK Head of Compliance and MLRO at Banking Circle. And I'd like to also introduce my colleagues here on the desk. Just guess, can we call it a desk? We're all virtual, aren't we, right? So on this virtual desk, that is Zoom, I'd like to introduce Chris.
Hi, my name is Chris Hill. I'm a partner and head of fintech at the specialist tech law firm Kemp. Robert?
Thanks, Chris. Robert.
Hi guys, I'm Robert Courtneidge. I've been a specialist in the payments industry, particularly in the legal side of it, for the last 30 years. And most recently, I have been advising companies on setting up and working in this incredible industry that we love.
Thank you, Robert and Chris. And in addition to the three of us, there were a number of other contributors who I'd like to give a shout out to. Alexa Devlukia, the CEO of Payment Solved and a former payments policy specialist at both the FCA and EBA. Joanne Dewar, CEO of GPS. Alison Donnelly, Director at FSCom. Andrea Dunlop, the CEO of PaySafe. Jacob Ganti, Partner and Head of Financial Regulation at Kemp Little. Lisa Graham, CIO of GPS. Garth Mahoney, Head of Compliance at Morewant. Gaedra Mikute, Associate at Locklord. David Parker, the CEO of Polymath Consulting. And Kitty Rolfe, the Head of Legal at OpenPaid. So as I was saying, the purpose of today's call is about the EPA paper on avoiding a payments lockdown. And what we will do today is take you through that report to give you a flavour of the detail that is in there. So I guess the first thing is, how and why did this paper come about and what were we looking to achieve? Chris, can you share your thoughts on that with us, please?
Yeah, sure. The reason it came about is that we were having one of our frequent project regulator meetings, actually on the day that the shutdown happened. And we'd all been expecting perhaps something might happen in relation to WDCS because we'd seen all the news stories about what was going on with the German company and I think by that stage, both the allegations of the fraud, the very large fraud, and also the insolvency proceedings had just been issued. But even then, we were sort of really surprised to see that there was that the whole thing had just been shut down so quickly. And we thought about it. Thought, well, there's a couple of things going on here. Firstly, we don't know everything that's going on. I think we have to be sort of very open and receptive to that point. That,
exactly.
That the FCA was dealing with a very unusual and quite a scary situation with that extraordinary level of sort of fraud going on. But also that there were aspects of the way it was shut down where we thought, hang on a minute, maybe there are other ways that this could be done. If we do correctly understand what the issues are here around sort of the safety of the safeguarded funds in those accounts, if we were in the position of a regulator with as much knowledge about the many intricacies of how this industry works, knowing all that, would we have been able to tackle that in a different way to achieve the same end? And so what we've done is to produce this paper with a couple of particular purposes in mind. One of them is that we realized that actually there's, unless you're deeply embedded in the industry, there's really very little way to find out from the outside exactly how it all works. The way that these business models have developed is such that there's a lot of terminology that flies around that isn't readily understandable. And we thought it would be useful for the FCA and the team there, and anyone new into the team to have a sort of a reference guide. So that's what we put together as the first purpose. The second one is that between us, and we've gathered from that list that you just mentioned, a group of people from lots of different bits of the payments industry So there's a lot of collective and sort of varied expertise and viewpoints there. And we sort of sat around and thought, well, what are the impacts? What can we learn about from this shutdown?
Yeah.
Not just about this shutdown, because it's kind of an individual situation in its own right, but about how any shutdown would work. So if there were to be similar circumstances or circumstances in which some kind of insolvency was happening, what can we learn? What can we reflect from our own experience of the payments industry that we could tell the FCA that might be useful to them in formulating a response to a different shutdown in the future?
Brilliant, thank you. And I mean, yeah, it makes perfect sense there. This was an isolated new incident, and there's lots of learnings to be had by all. So thank you for that. And Robert, over to you. How do you see this paper as a bit of a reaction to the different events that had started occurring in the industry at the same time?
Thanks, Mitch. I think there's a lot going on around this, and I think one of the reasons it's useful to put a paper like this together is to disperse some of the sensationalism and myths that are popping up. I mean, I don't know whether you've seen some of the articles. There's articles by other industry players that are clearly in there just trying and steal Wirecard's clients for themselves. And there are other articles from allegedly talking about what the EU is looking at in relation to this, and talking about, well, what can we learn about this? Is there something wrong with the way we're allowing these fintechs to come through? Should we be allowing fintechs to go from a sort of minor regulated status as a PI or an EMI and then become a fully fledged bank? They're suggesting perhaps there is something wrong. And I think that is completely wrong. I think the regulation as it has been put out today is pretty good. I think the safeguarding, and I don't think this particular situation has actually shown there to be any regulatory failings. I think the failings were more to do with a head company that was on a stock exchange, somehow falsifying its trading records through its accountants to overrate its stock to get a higher share price, which had nothing to do with the underlying businesses. Unfortunately, what happened was the underlying businesses were indirectly affected by it. And equally, I can understand this as a regulator in Germany looking at the bank, or a regulator in the UK looking at an EMI. Mm-hmm. You think, well, if that was going on in the head company, perhaps there was some wrongdoing going on in these regulated entities. And whilst we don't know the detail of whether they did find any, my overall thinking is probably those companies were being run properly by a good management team in both of them. And I know the management team in the Wirecard team in the UK. They're a great team, and I could not imagine them doing anything wrong there. So I think the learnings that we as an industry need to do is move away from some of this sensationalism and sales pitching to come to us because Wirecard isn't a good provider, and look more at what can we do to learn from this and make sure the industry understands better, not just the industry, but the people around the periphery of the industry, what our industry is about, and show how strong we are as an industry. And I think that's what I wanted to come out of this paper. Maybe there were a few things we could have done better, but really and truly, in my view, it was all about showing how wonderful our industry is and how well we are actually running it in the majority of cases, and not letting a few things like this damage what is probably one of the best fintech industries in the world out of London.
Yeah, I mean, that you've touched on a few very, very beautifully articulated points of this started in Germany about a fraud, and it wasn't a regulatory breach specifically in the payment space, but the ownership and the accounting of a company that's then impacted its subsidiaries and connected companies here in the UK. And that's what's been the catalyst for all of this. Thank you. So Chris, the start of the paper gives the reader an overview in sections 1 and 2. What could you tell us about that?
Yeah, sure. So as I mentioned before, we realized between us that there wasn't really any obvious source of information for this. People who've been in the industry for a long time just know this stuff, and everybody talks about it. But if you're coming at it from the outside, and I know, because I mean, I'm a tech lawyer by trade. I came into payments sort of quite late on, and had quite a time trying to work out exactly a lot of questions, people trying to work out how this stuff fits together. And we thought maybe it was time to actually put down how this stuff works. So when people are talking about BIN sponsorship, when people are talking about e-money issuance and e-money distribution and agency and all these different bits and pieces, what does that actually mean? The core of that is explaining both to sort of newcomers to the industry and also to the regulator, newcomers to the regulator, what the business models are, because we don't think it's really possible or fair to ask a regulator to regulate an industry in a nuanced way when the industry hasn't communicated to them what those nuances are. And these business models are in places really quite intricate. They've grown up over time. What we've tried to do in these first two sections is basically give a bit of a reference guide. So for instance, what is the difference between issuing e-money directly versus issuing it sort of indirectly through a partner? What is a program manager? What's the difference between BIN sponsorship and e-money issuance, or an e-money agency, for instance? And they are different things. And the reason that all matters is because each different business model has different risk points to it. And each different business model, pretty much without exception, has lots and lots of players in a chain. And so if there is a failure of one, or a regulatory intervention of one, it's useful for everybody to understand what those business models are, who the other players are in the chain, and where the risk points are, so you can understand, it's like, if I'm trying to solve this problem, who do I actually need to deal with, and how are these businesses split up? So one of the examples, for instance, is that I'm not sure that many people outside the industry would be aware that Wirecard in the UK was providing both regulated and non-regulated services. So when it was doing sort of BIN sponsorship, for instance, or settlement only, that's not actually a regulated service, but that got shut down too. So it's that sort of nuance that we're trying to get across and just be a useful reference point. We've got a couple of three rather intricate diagrams at the end of the paper as well, which will hopefully help to sort of visualize some of the many words that are there. And I'm sure there will be kind of slight differences of opinion on some of the terminology. It's like, well, we don't call it that, we call it this. That's fine. We just want to sort of get across in some way, shape or form how each of these principal business models work.
Yeah, makes sense. I mean, as you touched on, there's been no central place previously for all this key information and all this key industry knowledge, which is complicated and diverse and nuances, as you mentioned. And this has now touched on all of those models and given industry knowledge and information to everyone really that chooses to read it. So thank you for that. And then the paper does go on to talk about how firms and regulators can avoid getting into a similar situation to what happened with Wirecard on that weekend where it was shut down. Robert, what can you tell us about that section?
Yeah, so the section 3 in the paper is looking at perhaps what things could have been done to help out, and maybe these things were done. We'll find out in hindsight in the future, but the likelihood of a parent entity causing a run on funds potentially of an underlying bank or EMI is semi black swan territory. I mean, it had never happened before. So how was the UK regulated entity, for example, going to deal with this? And so one of the things as a group we were looking at is what sort of things could be done as soon as you're aware of these things sort of happening in your business to try and preempt the situation. So clearly the first thing that any regulated entity should do if it sees something on the horizon through its parent that might affect it would be to contact your regulator. I mean, whoever your local regulator is, go in and speak to them about the situation. Now, maybe Wirecard did that, we don't know. But get them in as soon as possible, because the sooner the regulator's in and they can see that you're welcoming them in to say, look, there is this issue, but we're doing everything right. But we want you to see we're doing everything right. Again, there was some questions in where the funds were held, what type of accounts, were they properly safeguarded, and all these sort of things. Again, those sort of things could have been preempted with the regulator perhaps 2-3 weeks before the crunch time came, just because they were speaking to the regulator and talking about it. And the whole thing about how you safeguard funds and how that cascades through parent to subsidiary and what tier 1 and tier 2 capital that you can use, all those types of things are very, very well set out by the FCA. And even on the 9th of July this year, they brought out yet another paper, again, because of more due to coronavirus, really, and the likely effects on the liquidity of businesses. They brought out another paper on safeguarding customers' funds, additional guidance for payments and e-money firms. That was great. There was also a Dear CEO letter that came out around the same time. And all of these things was our regulator being proactive to our industry to say, look, this is what's going on. Reach out to us. And at the end of the day, the regulator, certainly the UK regulator, is quite proactive in this and wants to learn. And again, I think that's one of the reasons that we were very keen to get this paper out, is because the EPA has been talking to the FCA all the way through this process, and giving its feedback. Even though we don't know what's going on in specific situations, we could, as an industry, give feedback about what the industry is doing and what the different models were. And one of these things, and I don't want to push it too much, but Chris was saying that there's 3 beautiful pictures paint 1,000 words diagrams at the end of this paper, which are some of the best diagrammatic representations of our industry I've ever seen, and no one's ever put them down before. And I think they are going to be really, really helpful, both for regulators and for practitioners in the industry going forward. I think the other thing about our industry, as we said, is people come into it all the time, but people that have been in it in the past just assume everyone knows how this fits together. So it's great to finally have a document that pulls all that in. The other areas I looked at in my section, in section 3, were things to do with how you deal with the publicity that comes out of this. Because obviously, again, publicity against a parent, how do you create positive publicity about your EMI, saying, well, we are a UK EMI, we are fully regulated, we are fully committed, we are not the parent company that's going through these financial difficulties. We are a separate company, properly regulated, properly safeguarding our funds, properly looking after our customers. Again, that PR didn't get out there. All that was happening was negative PR, negative PR, negative PR. That didn't help them. And as I say, I think we as an industry have tried in this paper to get behind them. I mean, many of the contributors to this paper are competitors of Wirecard, but it's not a time to go in and crawl through the bones and see what you can get. This is a time for the industry to stick together and say, yes, we do things properly in our industry, because whatever happens to one part of our industry reflects on the whole of it. Whether it's reflecting to the regulators or whether it's reflecting to the public who are buying our products, we've got to get it right. So that's the sort of things I was trying to pull out in section 3 with the group that was working on that. And I think we came up with some good points.
Yeah, no, definitely. And I think the really key part was what you touched on at the end there was, yes, this was one industry player, but the industry didn't turn its back and go, that was one player, let's leave them and let that be that. The industry, you know, you look at the people I mentioned at the start of this recording, there was a number of industry players from a number of different firms, some of which competitors, who have come together to put this paper together for the benefit of the industry. And, you know, you mentioned how firms and regulators can avoid, you touched on communication, how key that open and honest and clear key communication with regulators is and will always be. And then the paper moves on, Chris, to alternative means of dealing with similar situations as and when they may arise. What are your thoughts about that part of the paper?
So this section is probably kind of slightly artificially siloed and artificially titled because they're actually sort of scatterings of other ways that things can be done throughout the paper and all the different topics that we've covered. This particular part is looking at what the FCA's powers actually are in such a situation, partly for industry players to just be aware of what those what the FCA can do in a sort of insolvency type, there's something bad going on situation. And then it goes on to make a couple of particular recommendations about possible sorts of action. Again, very much with this headline caveat that we don't actually know. We weren't involved in the Wirecard situation. I should have mentioned at the beginning that Wirecard is a member of the EPA and has been for a long time, but they weren't involved in the creation of the paper, so very, very deliberately so. But even with that, we looked at it and thought, well, hang on a minute, you've got a couple of things going on. One of them is that all of Wirecard's operations were shut down because of this, on the face of it, because of the safeguarding issue. But actually, they were providing settlement services only in an unregulated way to a bunch of other customers. So a number of their clients were authorized entities that we've referred to as authorized customers in the paper, for whom they acted as a settlement partner, a bin sponsor only. So Wirecard wasn't actually the entity in that particular business model, in that particular payments chain, that was responsible for or operationally holding any of the safeguarded funds. So that bit, maybe that bit could have been left to continue to operate without being interfered with, and without damaging that overall purpose of dealing with the safety of the safeguarded funds. Another part is a couple of people have raised a query over whether a slightly different approach could have been taken to what the restriction was. So even in relation to the regulated business, where it was Wirecard operating as the e-money issuer, was it necessary to stop all activity? In particular, could they have let customers continue to spend their money, but not load new money in, for instance? Right, yeah. Again, from the outside, there may have been other reasons, but actually there's an argument that it's much safer to let people do that and prevents that immediate consumer harm. That risk is a better thing to avoid than the technical risk or the sort of theoretical risk of what happens if these safeguarded funds do something disappear. There are also a few bits and pieces around the idea of communicating with industry a bit more, which is a theme that kind of runs, you can probably tell already, so it kind of runs throughout. Those are the main pieces. There are a couple of other bits. It's worth a read through to get more of the detail.
Great, thank you. Which leads us neatly on to the next section, which, Robert, I'm going to turn to you for this. It was about the identification of the impact of this regulatory intervention on the different groups of customers. And Chris was mentioning these different groups of customers just a moment ago, and those that were having safeguarded funds here, but those that were not safeguarding through this institution, but actually had their own responsibilities. So again, the identification of the impact of regulatory intervention. What are your thoughts on this section of the paper?
Yeah, I mean, I think one of the good things about this, if you can see that in relation to lessons learned, is that if you want to do a case study on a business that covers more regulatory models than anyone else, Wirecard is your model, yeah, because they had so many different types. Their settlement only issuance of card model, as you were talking about, where another party actually issues the regulatory funds and holds them. That was 20% of their business. So don't think this was just like a sideline. 20% of their overall business, we're told, related to these settlement-only products, where they had the scheme license, the MasterCard or Visa, and the e-money was actually held by the company that was running the program, but they didn't have the Visa or MasterCard license to do it. And that company that's doing it could be a bank themselves. Some banks don't really want to go down the route of issuing all cards for all types of, and may have gone to Wirecard to say, could you run this program for us? So you could even have banks in there. I think the identification of that type of customer and the segregation of the different types of customers within an e-money issuer in this case is key. And I think if a business wants to properly prepare itself for something like this, it needs to spell out in very clear terms in its regulatory business plan that it files with the regulator what those business models are. Because then when the regulator comes in, before it comes in, the first thing it's going to do is going to pull out the files on that AMI. And they pull out the regulatory business plan and say, so it's got this particular model, this model, and this model. And then they go in with open eyes. So question, did Wirecard file all their models of business neatly and accurately with the regulator? And I go back again to our appendices here. Those sort of tables and those sort of diagrams, putting those in your regulatory business model is a great idea, because it helps the regulator, if they are coming in on any of these interventions, to make sure they're doing it properly. I mean, we have got in Europe an amazing amount of fintechs, and as I said earlier, the UK fintech market is phenomenal, and we want to keep that going. But in order to do that, I think communication is key, and I think you've been raising this across the whole thing. One of the things is the industry and the regulators must regularly communicate and talk to each other. HM Treasury is needed to be talked to in relation to any new regulations coming in, because they are the ones that draft them. So we need to make sure that HM Treasury fully understands the model, so when it drafts the regulation, it works. And then obviously we have our stakeholder meetings prior to the regulation coming in with the FCA in relation to PSD2 and in relation to EMD2, etc. And again, we're trying to iron out any of the creases in there that might cause confusion. The conflicts perhaps between GDPR and PSD2 can be sorted out when you're having your discussions on the Payment Service Regulations 2017 coming into force with the regulator, how the regulator is actually going to police that and how they understand the models will work within it. And so those sort of communications are key to everything. And the regulators themselves need to make sure they have sufficient resources dedicated to be able to understand these business models and have regular sessions with the industry to learn and understand about them. And as I say, again, part of what pulled this whole thing together and what all the people that were building this model and this paper were about were, how can we make our industry better? How can we make everyone understand what our industry does and make our understand what a great industry we are? And so, yeah, so that the section 5 is talking about how we can do that.
Great, yeah, I mean, there's different impacts as a result of regulatory intervention, and there's so many different customer types through this as a result of so many different business models, and Wirecard had so many of those that there is that need, as you mentioned, of documenting it, making sure it's really clear, it's really ready, and it's communicated that's been a theme so far in all of our conversation, which very neatly brings me to section 6, which is clearly entitled Communication Priorities and Strategy. Chris,
that's a wonderful segue. This is in particular about the fact that a lot of the communication was understandably very rushed, very poor, very patchy, because the shutdown, for reasons that we've gone through, was done very, very quickly. But that was quite revealing about where the weaknesses lie if there is a shutdown of any type. And
the shutdown happened on was it a Thursday, Friday? When Friday. The shutdown happened on Friday.
Friday morning, I think, Friday noon, something like that. And suddenly the regulated entity in the middle has an order saying just stop everything. Mm-hmm. They then are the ones that are, in the normal way of things, expected to communicate with the many different stakeholders that they have in these complex business models. And the result was that you've got this bunch of people who are rushing around trying to sort of basically reeling from the shutdown, trying to do the best they can to reassure customers. Mm-hmm. But there are obvious gaps in that. And the suddenness of the shutdown, the fact that there was therefore so very little warning meant that there are quite a few knock-on effects. Things like, or really not being able to deal with any of the nuances. So which payment runs do we complete, which ones don't we? Then you've got all these program managers, some of whom are not regulated, but are using that sort of partner issuer model that we described in the earlier sessions, where and that's a big part of the industry. And it's a fantastic part of the industry for sort of promoting innovation. I mean, the likes of Mondo and Revolut all started out like that.
That's how people start. That's fintech here. That's a great part of the industry. It's key.
It's very, very important. But they couldn't get the information that they needed out from Wirecard, who were very busy doing stuff. So we looked at that and thought, well, hang on, what could be different here? So firstly, we thought that there is a case that although EMIs have to report and register who their agents are, actually should they have to do that for the distributors and program managers and those for whom they are only event sponsors as well, so that the regulator has like a really clear list of who needs to be contacted. Then we thought actually one of the things we thought might have helped is if that was a specific task of the FCAs to deal with that communication and to supervise the communication and almost to sort of sit alongside the understandably panicked people within the entity itself, to say, yeah, that's an okay answer, that you can go ahead, or yes, you can switch back on the then sponsorship only clients, or you can give some kind of update about things that are going on, because what actually happened was that it was a lockdown of communication as well. We also thought that there was some, we think a lot of the problems here can be dealt with in the sort of direction of travel that the FCA is already going in, which is around effective wind down planning. But however effective your wind down planning is, it's never going to be quite right or quite as effective as conversations at the time when that specific situation actually happens. So we think there's a lot that can be done actually by, even if it's done on a totally confidential basis, it's sort of a lockdown thing, a bit like a dawn raid, going to the other people that are next to the regulated entity that they know about through the wind down planning and saying, look, you cannot tell them we're about to do this, get yourselves ready, make sure you do that. And then they will be able to ask questions and raise points and say, well, yeah, that works for these ones, but what about these ones? It's that sort of early communication that would assist any regulator in providing a sort of very, very nuanced response to deal with the risks at hand for that particular situation.
Yeah, I mean, there's so many different, now that you speak through it, there's so many permutations and secondary consequences almost of such an action that need to be thought through and then need to be appropriately communicated, because at the bottom line, there's still always those customers that need to get that information one way or another through whomever they're contracting with, and there's a number of parties in that chain.
Yeah, it's worth remembering that in this particular instance, and I think will be the case with a lot of similar type shutdowns, you've got a lot of vulnerable customers, that you've got people who are using these services which are fantastic, by the way, generally for financial inclusion. One of the corollaries of that is that because they go for financial inclusion, for a lot of people, they are their primary banking service. So shutting the service down probably should be kind of a last resort, because it's going to cause a lot of distress to a lot of people very quickly, and communicating whatever you can about how that's going to be relieved over time, whether it's directly with the consumers from the shutdown entity or via program managers, for instance, whatever can be done on that front would be hugely helpful, I think.
And that was compounded again by the fact of people using it as their primary, not needing more communication, and it happening on a Friday just before a weekend, which caused some concerns for a number of the underlying consumers.
Yeah.
Thank you for that. Super interesting. And then that leads us to the repatriation of funds. And Chris, I'll stick with you on that section.
So yeah, one of the other aspects of this was our understanding, again, very much from the outside, was that one of the requirements of the shutdown being lifted was that the safeguarded funds, which were held in a tier 1 bank in, I think, Germany, or at least a significant proportion of them were, had to be repatriated, had to be brought back to a PRA regulated tier 1 bank in the UK. Which has raised a lot of eyebrows for the rest of the industry for a number of different reasons. So firstly, Wirecard were lucky because they were able to do that. And I say lucky because they were one of the few AMIs that actually has a tier 1 bank relationship in the UK. Pretty much everyone we spoke to that's in the same bit of the industry said, yeah, we'd love a tier 1 bank in the UK, but those relationships are incredibly difficult to come by. So a lot of them are banked elsewhere and have to spend a lot of time and effort maintaining those banking relationships. So it obviously raises alarm bells. If a shutdown happens, it's like what you're saying, I have to bring that back to a bank account in the UK. That doesn't exist. That's not an option for me. And another one is the issue around the insolvency itself, because at first we looked at it and thought, well, surely this is to do with the fact that there was this insolvency process going on in Germany, or were those assets going to be frozen? And we thought about it, so, well, hang on a minute, these are safeguarded funds. These are safeguarded funds in a member state under PSD2 or the AMRs. So they're safeguarded under a state that has the same rules, which say that any insolvency practitioner can't get their hands on those funds. They're meant to just pop out. So we need to know, as an industry, we need to know or get confirmation of, look, is it still okay to be banked in other jurisdictions in the same way? And we're not going to have some requirement to repatriate that we just can't fulfill. We've suggested a couple of potential alternatives, neither of which is particularly strong. One of them is the idea of the FCA or some kind of independent trustee function setting up a sort of an account facility that can be used for that, but operationally we think that would be a bit of a nightmare. Another one is whether the regulator should work with the insurance industry to go down the other route of safeguarding, which is having an insurance policy. But again, that's not necessarily a particularly easy or quick solution. So there are a few issues there that we would really like to discuss with regulators. I think that repatriation thing has scared people a little bit. And I think people just want a bit more clarity, both now and for after the Brexit transition period, on where those banking relationships stand, because they're a core part of the industry's ability to thrive.
Yeah, and I feel like I'm overemphasizing it, but again, for me, the communication aspect of coming from the regulators back down to, well, this is why repatriation happened. And whether is it about it being in the UK, and what does that mean for, well, where can we have safeguarded accounts, is the key part of this repatriation piece. Because like you said, some firms just don't have bank accounts in the UK, nor are they legally required to have bank accounts in the UK at this time. Perfect. And then the last section, section 8 of the paper, is regarding safeguarding and the potential areas of concern that industry and regulators can work together to resolve, potentially making a better and more reliable methodology. I'll touch on this one and give a little bit of flavour of what we covered. Everyone agrees and everyone knows that safeguarding is important, right? The aim of safeguarding is to protect customers' money, and it's imperative for the industry, consumers, regulators, that safeguarding is well managed and does not fail. So in an attempt for industry and regulators to work together on these safeguarding aspects and continually enhance, we outlined 6 areas of potential concern. So is there a concern in the industry of a better understanding of business models? As has been mentioned throughout the conversations here, there were so many different business models in play, and safeguarding regulation and requirements is a few sentences. Yes, there's guidance out there in the FCA approach document, but is there a need for more specific guidance, a better understanding of business models, what the nuances are for each of these, and what can be actually released from detailed guidance on this model requires this type of safeguarding, and helping the industry along that and working together. Then we go on to number 2, which is the FSCS cover. FSCS is in place for banks, and banks can use that insurance, but authorized payment institutions, E-money institutions do not. They don't have access or the ability to get to it. They follow the safeguarding requirements. And there's a consideration here now, as authorized payment institutions, e-money institutions were historically entry points to the payments industry. Some have grown to levels of more funds flowing through them than some banks. And is that still the right model for safeguarding? Should there be, and again, this is just at a very high level conjecture perspective, but should there be conversations around allowing some of the larger flows to be benefited by FSCS protection, at least allowing the API EMI to make that consideration and apply and pay the charges applicable, and have conversations around that. The paper goes on in aspect 3 of the challenges of safeguarding. While from an academic perspective, things do fit together and fit together neatly and well, as with anything, when there's a practical application, there's nuances that need to be thought through. And we touch on those nuances and say, well, here's a challenge of this is where the regulation says it needs to happen. And here is something that we need to think of practically. One of the aspects, for example, is a safeguarding calculation happens at a point in time during the day, when you reconcile and do your internal reconciliations and your external reconciliations. But the funds are still moving. The business doesn't stop or shut down at that point in time. So it's a continually moving part. And then it goes on to relevant funds. Authorized payment institutions and e-money institutions can define which funds are being deemed relevant funds or non-relevant funds to a certain extent. There's some that is not movable, but others they can decide this is the contractual obligations of which we are receiving these monies. And this is relevant funds, or perhaps this is not relevant funds in an authorized payment institution part. And it's how we then put more guidance around that to give a consistent viewpoint and a consistent aspect for consumers on what do they know, what is safeguarded and what is not safeguarded. Then it goes on to, when does safeguarding end? Does it end when the payment institution sends the money out its doors into the payment infrastructure and architecture? Or does it end when it's received by the beneficiary and you have explicit confirmation of that? And what happens in the interim? If it is that it must be explicit confirmation of receipt by the Benny, well, do you hold safeguarded funds with your own firm's money? And potentially there's money out in the industry, in the architecture, which may come back. And what happens in those instances? And how much money should firms really be holding themselves in order to support some payments? For example, some payments may be larger than the regulatory capital they're required to hold. And how does that reconcile? And then the last part is the reliability of safeguarding calculations when it really matters. And this is more of a human element that we try to introduce. The concept being a firm could be perfect, could be great, and be doing its safeguarding calculation perfectly every single day for its entire existence. But if something does happen and there's a strange event that occurs, and that company starts to realize that it may be going insolvent, you've got employees doing that safeguarding calculation. In those last few hours, days, potentially weeks running up to it, will there be the same motivation? Will there be the same control environment? Will employees be saying, I know that tomorrow this company shuts down and I have lost my job and I've got a wife and children to support, but I have to stay here and do the safeguarding calculation and move those funds when the next day they're unemployed? And there's the real practical implication of what happens when things truly do go wrong. And there are people there responsible for these calculations, and how can that be addressed, and what conversations should we have surrounding that? And again, it all comes down to additional communication, additional working together between industry and regulators to support both parties with knowledge of what exactly is happening and how to make things better. And that's the paper. I think final comment from me is, we've brought together a lot of industry people together to put this in one place, which hasn't really been done before. So much information and detail in one paper that documents the nuances of our payments industry. And it's definitely, from my perspective, worth a read. Robert, over to you for your final thoughts on the paper.
Yeah, as I say, I think it's quite a seminal work in its own way. It's not really been done before. I think it was brought out as a result of the Wirecard situation, but I think it's much wider than that. I think the kind of situations that came out of that, the unintended consequences of Vera, who was interviewed by the BBC to say that she couldn't pay for her food for the weekend because her account got closed on the Friday. These sort of real stories that came out of that, I think, brought home how incredibly wide our industry is, and what an important role e-money plays in this whole space of financial inclusion. We have some incredible products in the marketplace. The UK, as I say, is a fintech hub, creating great solutions for many different industries. Many payrolls go through on e-money and the like. And on a Friday, when you've got the last Friday of the month when payroll goes in, if it doesn't go in, people can't buy their food for the weekend. They've got no money. So I think a lot of these considerations are great in hindsight, but what we wanted to create here was a hindsight so that it can't happen again in the future.
Yeah.
And I'm very proud to have been part of this great publication.
Great. Thank you, Robert. And Chris, as our editor, over to you for the final comment, I guess.
Final comments. I think more than anything else, I want this. I would like to see that this paper is not seen as a fait accompli, that it's seen as a start of more of a conversation. And we've detailed we early in the paper that we think the best way for the industry to thrive is to communicate regularly with the regulator, because the industry wants to be regulated well. It wants to act in a safe way that's good for consumers and good for all the other players in the industry. There are this particular case, although as Rob very rightly said, it actually emanates ultimately from a case of fraud and a case of sort of poor auditing on the other side of the world, almost. There wasn't actually anything going wrong in the operation of e-money with the firm that was shut down. But we'd be very silly to ignore the lessons that can be drawn from this, not least because as a group of professionals in the payments industry who are heavily involved in all of its many nuances, we can see where those risk points are, and we can help the FCA to understand. I mean, it's sort of a commonly understood thing that innovators work faster than legislators, or regulators. They come up with that's why they're innovators. They do stuff faster. But the best way that those innovators can make sure that they're regulated in as best a way as possible is to keep the regulator up to date with what's actually going on. And that's something that we want to really increase and see this as something of a starting point in doing that.
Got it. Great. Well, yes, that leaves me just to say a big thank you, Robert. Big thank you, Chris. Thank you to all of the contributors who I will be also listening to this, and to everyone watching this. Thank you again for taking your time to listen to this, and we hope you enjoy the paper. Thank you very much. Have a good day.